Thank you for coming on into the live and sharing your essence with me, this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in each and every day. We'll do the same without wasting a single second of your time. Bada bing, bada boom, we go into the charts. So we got that move to the upside. However, on the retrace here, we did a deeper retrace. About 2/3 of this move was given back. Let's go find out how much of that was given back and whether it's still viable to a continuation run for profit to the upside to that 382 reclamation of the vector candle of the drop down here from that move up here. So let's go ahead and take a look at the liquidity of high block capital. Well, what is high block, you say? Well, people lock their liquidity into the charts to get burnt to a crisp by the market maker, and we get to see where those crispy characters got burnt. So let's go do that now. So looking at the 1 minute time frame, 1 minute time frame. So as we were streaming yesterday, we were talking about the 15-minute either holding and sending us as a continuation of the upside, which it did hold for the entirety of Asia and London, and New York proceeded to drop it alongside a lot of the tech stocks, and it went into this 100x pool of liquidity here and their partners in crime, 90 billion, 108 million, and it went even further to go liquidate the 50x partner in crime down there.
Fatality.
And that is what happens. And then as it dropped down here, we now pinged in some shorts to the tune of $127 million pools, which they could now retrace back into. However, there is that $145 million 25x long pool alongside all of the partners that they pinged in here down at 25,773 that they could come back into. Let's go see if it is a viable option. As of this moment, there's $885 million imbalance to longs, but we forgot all of this liquidity up above to the external pools. So let's shift our attention and expand our vision to the external pools and see what lies above. So up above here at 27, you do have, wait, what? On the 7-day time frame, looks like a lot of, seems less for some reason. Weird. Let me make sure this is correct. Interesting, they adjusted the values, so they no longer, the Z no longer represents billions, but 100,000 pools. So all of these pools down at 23.6, you have in total a few billion down here, and they adjusted the values. So this entire thing, they were ramping the leverage up and putting the leverage amount. So now you see this adjusted heat signature on the monthly time frame of yellow value is a 700k pool. So this sub 23 region is not hundreds of billions of dollars, but it is a few billion dollars down here at 700, which is still obviously significant to a measly peon like you or myself, but the value that was previously being displayed is now changed on high block. So these yellow pools are now $2 million. So we have 3 and 6 month time frame characters of only a few million. Interesting. So the imbalance down at 24.3 is $6 million, $4 million, 3, 4, 6. So they're not billions, $100 billion pools, they're just $6 million pools at this time. So they've readjusted the values and what they represent. I'm gonna have to read into that because that has totally shifted what is displayed at this time. Still seeing that the imbalance is to the downside here, down at 23.6 on the 2-year time frame. We still could come a little bit lower, as we've been talking about, after we get a retrace potential into that vector candle. We could see a C continuation to the downside, so please be aware of that. As it stands right now on the 7-day and the monthly, 7-day you could retrace back into 27k without hesitation, and if we go to the monthly time frame, the amount is to the downside, the imbalance rather is to the downside. So do we continue that after retracing into some of the liquidity up above? Let's go ahead and see what we can see on the Binance chart, shall we? So I previously had a retrace idea in mind for here, it failed this golden pocket, so we did a deeper retrace of the entire leg up, the 5.7%, which they gave back 3.7%, and we are currently seeing a reaction off that golden pocket. So you can adjust. In bullishness, you would do it from the continuation impulse. In the deeper, more conservative retrace, it would be the entire impulse and retrace idea. So we did get a reaction off 25,884 for that possible continuation idea. Also happening to be that 1382 level of the bearish trend based fib level that we had price in from here, this impulse retrace drop to the downside. So in order to see some sort of bullishness, you'd have to have some confirmation, as we were saying, of a cloud. What do we mean by cloud? Well, we have to throw on the oscillators for that to occur. So let's go ahead and do that now. What is this little bit of happiness? Link is in the description for more. Scroll down to features, toggle at your leisure all of the components here from Bitcoin's local bottom, or each component to read about it as we come into prominence. So the one always coming into prominence is the cloud and how it reacts at the cloud. So we would have to see, even if we did make a conviction move into this vector candle, we would most likely get rejected off the adaptive moving average and the cloud here. You can read about the cloud, the first sign of reversal, or the adaptive, a sensitive yet stable moving average, which factors out noise and displays where price will meet with resistance or support. So in this case, we have this resistance line up here, which we previously broke through. So this is the 12-hour time frame. We are seeing the cross-up event still hold. We got 1 hour and 26 minutes for this candle to close. And if we go to the daily time frame, we're going to see what's happening with that. We're reclaiming the baseline, scooping up the price in a nice manner here for a daily potential move. Let's go ahead and turn on oscillator B. So oscillator B showing the Williams and the stochastic and the MACD meeting in a manner here at a oversold region, hence the purple coloration background on the daily time frame. Daily value is with a thumbs up, good to go for a potential move to the upside. If we look at the three-day closing in a day's time, so after today's candle close into the weekend, we would see the 3-day reset as well, and most likely this Williams would come down to boot. If we go to the 22-hour time frame, which was previously starting to play out, we are seeing a stochastic fatigue here on the stochastic RSI, and the money flow coming above the RSI without really giving us the move just yet. So can this KD line give us a little bit of a hurrah to the upside with conviction, or are we going to just continue trading, range trading for a potential drop? As it stands right now, we are getting a reaction off that 618 of the entire impulse retrace idea. So what does that look like? Well, it looks like this. So as it stands right now, they got out the riffraff of the 100xers, so can they continue higher from here? This is where they had the reaction. It was actually a little bit lower than the 618, but we'll see how that occurs. So on the 22-hour time frame as well, we are also outside of the Keltner channel, which is this ATR based Bollinger Band. So when you drop out of the Keltner channel, we were talking about how you previously like to come back into the known, come out into the unknown. You like to go back into the comfort of the known. So coming back into the Keltner channel is what occurs on all fractalized time frames. When you come back above the Keltner channel, you come back into it, into the known, out of the Keltner channel into the known, into the unknown, into the known. And that's basically a rinse and a repeat on all time frames you can take a look at. And also, if you look at that 12-hour, it's also doing the same with the cross-up event as well, maintaining that 12-hour time frame. 12-hour subtle support is wearing thin as we start to get oversold here, or overbought here on the 12-hour. Rising sun has yet to activate and give us anything noteworthy. You're meeting with resistance at the 0 level for the MACD. Does the MACD break down and come down to the Williams domain, or does it get sent up by this golden light of the sun, rising sun event of the Williams? Things in confluence for upside are this baseline support, Keltner channel coming back into the Keltner channel, and this Williams being oversold with this level here being honored. Things against that are the stochastic RSI going sideways while this is getting overbought, and the money flow coming above the RSI suggesting fatigue. So you're getting some ambiguous signals now appearing on the 12-hour time frame. So if you are in a long, this would be where you start to move your stops into profit to protect your investment. And if you look at the 6-hour time frame, we do have this cloud that is thick. So we were talking about that thick cloud. You'd have to show conviction on the cloud to be bullish. Otherwise, you could just be dumping back down for that ABC to the downside. As it stands on the 3 month and above, you do have a slight imbalance down below at this 2 level that we could come back down into just as easily. I'm a little bit thrown off today. I did not expect them to adjust the values here. We have all these $1 million pools that we've always been referring to in billions based off of the Z axis, but they adjusted the value here. I'm going to have to send 𝗥𝗲𝗶𝗿 an email what actually changed in the calculation and why does Z represent less money now. So we'll figure that out later. So on the 6-month time frame, you're also getting this holding of the bottom baseline here still in effect. So this is where you use this as a monitor, a price action monitor. 6-hour time frame also overbought as of this time, coming back down. You had previous bullish divergence on the money flow, which kicked into effect to the upside here, and we could be seeing this double top scenario for the 6-hour as it slowly meanders its way into that vector. 4-hour starting to reclaim the cloud here on the oscillator. One thing to note against the idea of upside is the cross down event has been confirmed as of the last 8 hours. So this cross down event is possibly in play for a suppression, a bearish retest of this cloud to drop down lower. If you take a look at the Williams not yet overbought, which came to overbought territory and came back down. Could we come back around again for that double top or triple top scenario? Hourly time frame attempting to play out here. Money flow beneath the RSI, suggesting the money will flow back in with the stochastic rise up on the hourly time frame, which means the Asia pump into dump idea, which generally occurs, and we'll go and show you how that occurs as well. I got a little bit of time today. My wife will take my son to school, so I will, but I still have to go in early, so I do have to get ready to go. So the 15 minute, you're most likely looking at this as a shoulder head and a shoulder idea. 15 minute is getting resistance off the cloud and overbought here. So does the hourly time frame, you're getting 5 time frames overbought here. We already went over what those were with the subtle support of the 12-hour and the subtle support of the 22 and the 6-hour as well. 4-hour also in slight overbought territory. So it's up to the hourly. What can the hourly give us? The 15 minute from this cloud kiss didn't really do much of anything. It barely held the cloud and then dumped back down into this pocket. So can this start to make a move to the upside. We've been basically range trading within these fib levels. What are the fib levels? Well, if you go back here, this entire leg up here, this leg, you have the 706, the 786, and the 886 of this leg, the deep pocket. We've been just consolidating within the 886 and the 706 of this pocket, and also happens to coincide with these bearish trend-based fib levels. So how does this maintain going into Friday? Is run for profit Friday? Are they going to run into the vector a little bit and then continue down lower? Based off what I was seeing when we were breaking down here, there's still a lot of pools up here at the 27,476 and 27,104 region. The 27K is an attractor. Whether we get rejected there or not, it is still an attractive point for price action to go. We went slightly up to that at 26,826, but we could be refueling to go attack it higher. How does it maintain going into Asia? We talked about a longer term swing play would be to reclaim that 6-hour cloud. So this is the 6-hour cloud. You have to have some conviction out of there, reclaim it, and flip the cloud to thin at that point here. A less likely scenario is what's happening right now, which is just a bearish retest continuation to the downside potentially, but we have generally 2 or 3 hits to the high, so you could look at this as one, and then you have a second one. So you look for that reaction on the 6-hour cloud. What's going to happen? And that's my story, and I'm sticking to it. So the hourly play here, what does the hourly give? We have not reclaimed the cloud in the same manner we did here. We are actually beneath the cloud with this 5 time frames overbought. So this is not as clear a signal as it was in the range that we came out of back here. So for a bullish signal, you would get that reclaiming of the cloud, and you would get that significant move and hold the cloud, and then that continuation of that bullishness of the flip of the cloud there. So back testing back to June and seeing this zone which we're currently at is where you would see some bullishness, and we're not really getting it right now. We're getting a sense of fatigue, a bearish retest, an inversion of the cloud where you come back to this level and potentially continue lower. So as we enter Run for Profit Friday, what does the pools of interest look like? Well, we have that 26,329 pool of 50xers. We already got their 100x partners down here. Can they go up to that 26,845 region on the 7-day? That 27K region is an attractive point, so they could come back to that 27K. We have those pools marked. I'd be looking for some sort of reaction off of these pools and see what that is like. That would also coincide nicely with the 6-hour time frame. Cloud idea. So this cloud is mighty thick and no signs of abating just yet. The thickness is mighty thick, so this is where we're getting that resistance against the cloud. So this could be your M pattern double top idea, where you straight up reject the cloud and just come back down to make that stab. All if then signals, that's trading in a nutshell. How do you react when these things occur? And this is why Momentum Master gives you that dynamic alert system, so you can get those alerts sent to your phone, so you don't need a constant update from a guru. You can just take a look and decide yourself when you see those 5 time frames overbought or oversold. You can act accordingly to your point of interest. So we're now getting the 5 time frames overbought here. Need to see some conviction step up to the plate. Not really seeing it as of this moment. This was your moment yesterday to see some sort of move. It failed out of here, so this could be a failure pattern to the downside. Keep your eyes on the prize, and I'll catch you on the flip side, ladies and gentlemen. So thank you for coming on into the live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in. Oh no, my charts were never up the whole time. Was I just on the up close the entire time? Oh, I was. I never switched to... I hit the button. That's weird. Oh my god. Well, that was a waste of time. I hit the up close button and it didn't react. Let me see. Hold on. Oh man, it didn't... Well, that was hilarious. Well, hopefully you got some value out of the words I was saying. So I'll go back to the last screen then. My eyes must have looked intense then. Well, what I was saying here, this is the last little bit of happiness. So I was seeing this reaction off the 618, and we're saying that you could come up to this pool here. In a nutshell, this is what it all comes down to. In a nutshell, do we see a reaction off of these pools that we had laid out over the last few days at 27,104 and 27,476? Or do we get a hard rejection off the range high here and come down and start to break into lower price range? As of this moment, we're getting 5 time frames overbought, and yeah, that is not showing signs of bullishness, although we did get a reaction off the 618 for the second time here of this deeper retrace idea. So the one thing is the hourly time frame here. So the hourly time frame has potential to take off here with the money flow beneath the RSI, and that is the story that I'm sticking to. And I'm sorry if that was not visible for the entire time. I swear I hit that button. It must have not instantiated for whatever reason. That's so strange. Well, ladies and gents, thank you for coming on into live and sharing your essence with me in this eternal moment of which we all share an inextricable and inexorable part. Thank you for doing your part, for coming on in. We'll do the same, and we'll catch you tomorrow. Peace.